My name is Tom Jones with P6 Biz Builders. I've looked at the books of hundreds of trade and service businesses over the years: contractors, HVAC, plumbing, electrical, cleaning crews, glass companies, you name it. I'm going to tell you something that really bothers me. A lot of owners are leaving profit on the table every single month. Money they have already earned, money that should be sitting in their bank account. I reviewed one company's books and found $147,000 of work that never got billed. Can you imagine that? And the owner had no idea. So that is not a money problem. That is a visibility problem. And visibility is fixable. You fix the visibility, you fix the cash flow problem and the money problem. Please listen to this. This is for general education only. This is not tax, legal, or accounting advice. In my experience, most trade owners are making at least 3 bookkeeping mistakes that hits their bottom line directly. Here's a real one. A client I worked with was writing off $55,000 a year in lost receipts and undocumented expenses. That is a brand new work truck, gone every year. You know the receipts I mean, the few receipts in the glove box, the supply house run you put on your personal card, the crew hours that got coded wrong, the Amazon order nobody attached to the right job. The fix is boring, but it works. Log every receipt daily, not weekly, daily. Snap a photo the second it hits your hand. I tell my client to use the 2-minute rule. If recording an expense takes less than 2 minutes, do it right then. Don't wait. One client recovered $2,300 in billable expenses in a single month by doing just that. And then add one more thing on top of that. The Friday financial reviews, 30 minutes every Friday. You look at it, what has not been billed, what needs to be collected, and what cash is coming in the next week. One owner improved cash flow by $115,000 a month just by invoicing faster. And that's what you do on the Fridays. That 30 minutes, you invoice for stuff that needs to get invoiced instead of waiting until it's done. So the thing is, the money is always there. He was just not collecting it. That is the point. Clean books are not just for taxes. Clean books help you make better decisions. Leak number 2, improper job costing. This one is sneaky. You think you're tracking your costs, but I promise you, most owners are missing pieces. I reviewed a client who's sure he was making 25% in his jobs. We ran the real numbers. He was making 8. The gap was all of the costs he never counted. You count materials, labor, subs, good. But what about the wear on your equipment? Fuel to the job, hours you spend ordering parts and coordinating the schedule, insurance allocated per job, office time, warranty work. That stuff counts. Take a $50,000 job, budgeted $350,000 for materials and labor, but you missed $400 in fuel, $1,200 in management time, and $600 in insurance. That's $2,200 you never accounted for. Run 12 of those a year and you have buried over $26,000. Here's the part that most people miss. When your cost data is wrong, you did not just lose on this job, you underbid the next one, and the next one, and the next one, because you are pricing off bad history. Get the cost right, your net profit can climb without you raising a single price. Here's a fix. Pick your last 5 complete jobs. Ask the following questions. What did we charge? What materials really cost? What did labor really cost? What extra time never made it into the estimate? And what did we learn before we price the next one? That is where the job costing becomes powerful. It's not about beating yourself up. It's about learning the truth before the next bid goes out so you can correct it. Leak number 3, missing change orders and add-ons. This is a profit killer I see the most. Customer asks for one small change, one extra thing where you're already here, just can you do that for me? You say, sure, no problem. You want to be easy to work with. I get it. But fast forward to the little end of the job, and those little favors ate your whole margin because you have contracted what you're supposed to do. All those little things are outside of the contract. You did not bid for them. Let me show you the math on something that looks tiny. Customer wants 2 extra fixtures added to while the crew is on site. Feels like nothing. $100 in materials, a couple hours of labor, about $150. Sub or specialty markup, $75. Overhead and profit, $125. That's $450 on 2 fixtures. Now multiply that by the dozens of small add-ons that happen on jobs every month. Here is the standard. Every change gets documented immediately. Don't wait. You want that done, you write it down, and the work will not get started until the change order is approved and it's added to the invoice. This is not you being difficult. This is you being professional. Good customers respect it. And honestly, it protects them too, because they know what changed, they know what it cost, and there's no surprises. The ones who pushed back on clear change orders were probably going to be a problem anyway. And again, I say that with love, but here's the questions you use on your team every day. What changed from the original scope, and did we get it approved? Ask that every day. That one question can protect a lot of profit, which is why you're in business. You want to make money, you want profit, so you can spend time with your family, take vacations, buy that home you want, so on. Leak number 4, poor time tracking. You think you know where your crew's hours are going, you're probably missing at least 15% of billable time. Untracked windshield time, payroll mistakes, forgotten billable hours, setup time, return trips, time spent fixing work that should have been done right the first time. It bleeds out slow, so you never feel the cut, and it costs you twice. You lose the hours now, and you lose the accurate data for bidding later. That means time tracking is just not a payroll issue. It is a pricing issue. It is a profit issue. It is a cash flow issue. The fix is not complicated. Use a real-time tracking process. Match people to the right jobs. Hold the crew accountable to the clock and keep it simple. Who was on the job? What job were they on? What task were they doing? And how long did it take? And was any of the time caused by rework, waiting, missing materials, or unclear instructions? The last question matters because sometimes time tracking shows you have a people problem, but often shows you a systems problem. Maybe materials weren't ready. Maybe the scope was unclear. Maybe a customer changed something and nobody documented it. The hours tell a story. You just need a system that lets you read it. That alone can move the number. I just want to go on a little sidebar here for one of my clients that we do. They track their hours. They pay by the week. And so before anybody can get paid, they have to track their 40 hours, whether it be time off, whether it be on a job, whether they got sent home early or whatever. But they have to make that 8 hours every day. So the time goes on. So you can see whether it's because they had to work backwards or they're on a job. When this customer bids, they bid hours per job. So the hours on the job end up being more than we started looking at it. But also with this customer, we look at their work in process every month. Why do we do that? Because what it does is it lets us look at what's going on. Do we have a problem with one of the jobs? Are we going to make profit on that job? So I'm just letting you know it's practical and it's in real life that you can do this. And the company has made quite a bit of money in the last 3 years because they've made all these changes. Number 5, this is where the math gets real. It is one that ends companies. Most owners use a standard markup. Some number they heard was normal. Maybe a competitor uses it. Maybe they've used it for years, but they never calculate what they actually need to cover the overhead to hit a profit target. Run it with me. Say your overhead is $200,000 a year and you are doing $1 million in revenue. That is 20% of your revenue just to cover overhead. Now add 15% profit target. Suddenly that standard 25% markup is not even close. And markup and margin are not the same thing. Let me show you. Take $100. You want to mark it up 25%. So you have $25. 125. But that's not the margin because the margin would be $25 of profit that you wanted into the 125. So you're actually only making 20% on that job. You're not making 25. The real way to get a markup is figure out what markup percentage you want, whether it be 25%, 30%, 40%, include all your overhead, your profit, whatever you want to do. So you would take that $100 and in the same example, you want the 25% markup. So you would divide it by 75%, which would bring you to 133. And you divide that $33 into the 133 and you get a 25 markup. That's the difference between, margin. That's a margin. So that's the difference that you get between markup and margin. As my example just showed, 25% markup does not leave you 25% margin. It leaves you at 20%. So it's not even close. Now, when you can get even better with your profits and everything, you can calculate your true overhead per labor hour. So you can take all your office hours, your insurance, vehicles, tools, admin salaries, marketing, software, training, bookkeeping, then add your profit target. What does that do? It covers all your overhead expenses and then leaves you with that profit. And I'll bet just even based on just this little example, the markup is a lot higher than what businesses are charging right now. This is not about being greedy. This is about making sure the business can pay the bills, pay the team, pay the owner, pay the taxes, and still have something left over so that they can stay in business. That is how pricing gets clearer, not based on fear, not based on what other guys charge, based on what your business can actually need to survive and grow. What this means for you. Individually, these 5 leaks feel small. Together, they're costing the average company $50,000 to $100,000 a year, sometimes more. The good news is every one of them is fixable. Starting this week, pick one, just one. Start logging receipts daily. Set up the Friday financial review your last 5 completed jobs, document add-ons before the work starts. That's a big one. Set up better time tracking or sit down and figure what your real markup percentage needs to be. This is not about working harder. You already work hard enough. It's about keeping the money you've already earned. And that is why this matters. For you, it means steadier cash, more take-home pay, less stress, fewer surprises, and a business that actually supports the life you want. And again, I say that with love. If this hits home and you want help finding your leaks, I built a tool for exactly this. This is my 13-week cash flow forecast. And it shows you where the money is actually going week by week. What cash is expected to come in, what cash has to go out, where the tight weeks are, and what decisions need to be made before things get stressful. Send me a DM, and I'll tell you, and tell me you want the cash flow template, and I will send it to you. Or if you'd rather talk through a situation, book a free 30-minute proactive cash flow profit strategy session with me. The link will be in the post or the comments, or you can DM me and I'll send it to you. Also, make sure to subscribe to my YouTube channel, P6 Biz Builders. We are adding short trainings that are there to offer you run your company better with better numbers, better cash flow, better systems, and less stress. By the way, do you know of any other businesses or individuals who could use our services? Please share my name with them. Have them DM me or share the link to book a free 30-minute proactive cash flow and profit strategy session. Thanks for watching. Start plugging one leak this week. Take care. Thank you.